Alrighty, guys. So another week is upon us for the stock market, and we have 5 companies to break down, all of which are set to report earnings this week. So we're going to break down charts, EPS estimates, revenue estimates, and if we have time, we'll break down the indexes, which you guys know we're pretty much at all-time highs right now on the Dow, the S&P, and the NASDAQ. So we have a lot to go over. So hit the like button, make sure to subscribe, and let's dive right into the video. So check it out, guys. We do have again, a lot to go over in this video. And on Friday, we actually had a lot of red in the stock market. So heading into this week in general, we did have some red. So we had the NASDAQ go down 1.5%, S&P went down 0.6, Dow went down 0.2, and it looks like the Russell, it's not showing here, but I'm sure it did have a pretty bad red day on Friday. I'm just not sure exactly. It's not showing here why, and it looks like what it did on Friday exactly, but it looks like here the futures are slightly in the red. And by the way, guys, this week we also get the CPI data, which we're going to cover a little bit in this video. So yeah, we let's just get into it. We have a lot to get into, guys. So last week we had SPY hit an all-time high at $518. That was on Friday, and it looks like we started pulling back pretty aggressively the same day. I mean, look, we hit 518, then we ended up closing at 511, so pretty big drawdown there heading into close. And here on the 4-hour chart, it looks like we're right by the 50 moving average right now. And on triple Q, if I pull that up, let me show you guys, pretty much the same thing. We're pretty much right by the 180 moving average, so we're slightly under the 50 on the 4-hour chart on triple Q. And on the intraday chart, you guys can see it looks like we hit an all-time high at 448, and then we sold down all the way to 439 by close on Friday. So pretty big drawdown there on triple Q, about $10, $9-10, or around, let's see, 2% from top to bottom. So let me show you guys what's going on here with CPI. Let me pull this up here on Safari. All right, there we go. I'll plot my face right here to the bottom, or on the bottom left, actually. That might be a bit better. There we go. So on Tuesday, guys, we get the CPI data for the United States. That's on March 12th, by the way, guys, so keep that in mind. So it looks like the core CPI month over month, the number is projected to be at 0.3%. That's the monthly number there. And last month it was 0.4%. So that's for core. So that's projected to come down month over month. And it looks like here the CPI, the headline number month over month, last quarter, or last month, was 0.3%. And now it's looking to be 0.4%. That's the projection. So that's actually projected to go up. And the yearly number is 3.1%. That's the projection. And that's what it was last month, right? So watch out for the CPI data. And of course, how it breaks down, all the different categories. We'll cover that in an upcoming video. So make sure you guys subscribe. But yeah, CPI is something we all have to pay attention to for this week. Inflation, the data, super important, guys. And again, we'll cover it in an upcoming video. So make sure you all subscribe. And let's go back here now to Think or Swim. And let's start breaking down some of these companies that are set to report. So the first one that I'm watching out for, which is actually tomorrow morning or today, depending on when you're watching this video, it is Oracle, ticker symbol ORCL. And let's see, are they for sure the 11th? Let me double check. Yeah, they're the 11th after the bell. So Monday after the bell, we have Oracle, and they're looking to do EPS of $1.38 versus the $1.22 from last year on revenue of $13.31 billion. And you guys can see, if I extend this to the right, we have clearly been in a downwards channel for quite some time on Oracle stock, right? We can see from $127 down to about $100, then we rallied to 117, back to 98, back up to 116. So now we're more towards the top of the channel. So we'll see if earnings are enough to push this thing through, I'd say 117. That's a big spot. So if earnings could push it through 117, that'd be huge. But we're not really showing any signs of that quite yet, so I wouldn't get too excited. But we do have a cup and handle, looks like here, cup handle forming. So let me set my alert at $118 per share. Mark is at or above 118, and we'll see where it goes. If we do end up breaking out of there post earnings, maybe we make a move towards 128, which is where it was back in September. So keep your eyes on Oracle. Another one that I'm watching, as I always watch when they report earnings, Adobe, ticker symbol ADBE. So let me show you guys this. We can see Adobe's down a good $80-ish from the recent highs. Let's see, about $86 actually to be exact, or about 13-14%. So Adobe set to report earnings on, let me see what day here, I think Thursday, the 14th after the bell, which I believe that is Thursday. Yeah. So they're looking to do EPS of $4.38 versus $3.80 from last year on revenue of $5.14 billion. And we covered the chart here before, guys. Adobe is pretty oversold in my opinion and is setting up quite nicely for a big move, potentially, especially if their numbers are strong. Now, if they drop the ball, earnings are terrible, guidance sucks, obviously we might fall through this channel, which will not be good for the bulls. But if they do pretty well, guys, we could be getting that push back to the high 500s, maybe low 600s. Obviously, it's not guaranteed, but keep your eyes on it. ADBE, as it is one of those companies that could potentially make a move like that. It's possible. It's happened before, and I'm watching it. So we also have ULTA this week. ULTA is the ticker, and this is pretty much at all-time highs right now. It's pretty dang close at least. So it looks like the all-time high is 563. We just hit that, about a week, 2 weeks ago. Yeah, about 2 weeks ago, we hit that all-time high. So ULTA is in a couple of days. It looks like they're on the 14th, so Thursday after the bell. They're looking to do EPS of $7.52 versus $6.68 from last year on revenue of, let's see, guys, $3.53 billion versus $3.23 billion from last year. That would be up 9.2% year over year. Not bad. So let's see, man. This looks like it's kind of getting ready to pull back. It's starting to, at least. We're down about $23 from the recent highs. We closed under the 50 moving average on Friday. We actually had a 1.5% red day on Friday. So if this sells off even more, maybe down to the lower 500s, maybe we start going down towards the 180 moving average here, that'd be a better spot in my opinion for ULTA. Maybe it sells off to that spot before earnings, maybe after earnings. Time will tell, but overall, I think it needs to come down a little bit more. I think it's a bit overbought, and that'd be a healthier spot for ULTA, in my opinion. 500, 505 in the very short term. So ULTA, keep your eyes on it, guys. And we also have Dick's Sporting Goods this week, which is DKS. Let me pull it up and show you guys. This is another one that we're heading into earnings week pretty much up double, up big time like we saw with ULTA. So we have Dick's Sporting Goods. I believe all of these are on Thursday. I think all of these, on the 14th. They're on the 14th in the morning. So Dick's Sporting Goods, they're looking to do 335 versus 293 for EPS. That's what they did last year, 293 on revenue of $3.78 billion versus $3.6 billion from last year. That would be up around 5.2% year over year. Not bad, but one thing that I'm not loving is the fact that we're up 90% or 80-90% heading into earnings, and we're pretty overbought already. So we'll see if this thing comes down a bit, maybe sells off. Time will tell. But yeah, DKS, I'm watching it. And last but not least, ladies and gentlemen, Dollar General, DG, which, who knows? This is one that's getting out of the hole. You guys can see. and we're already breaking out of some key levels here like 143. We broke out of 150 to 152. That's huge. And now we're trading in this window right here. If I extend it to the right, you guys can see we're trading between 152 to about 172. And, you know, we could arguably keep going here if earnings are strong. So DG set to report on, let's see here, guys, the 14th, so on Thursday in the morning. So DG's looking to do EPS of $1.75 versus $2.96 from last year, so that's not good on the EPS side of things. And revenue's looking to shrink as well year over year, or decline, $9.78 billion versus $10.2 billion from last year. That would be down 4.1% year over year. But hey, guys, that might be priced in. I don't know. But either way, what I do know is we're breaking out of this point that we talked about, that 150 to 152 level. We're above the moving averages. We have a golden cross, which is great. So let's see if we can keep on moving here, guys, on DG. Could be possible. And if we break 172, man, this could be going up even more. So what do you guys think? Let me know your thoughts in the comments. Hit that like button. Feel free to subscribe and get your free stocks for Moomoo, up to 15 stocks, each up to $2,000. Use that link down below. Open up your account and fund it with at least $100. You get 5 stocks, and fund it with at least $1,000. You get 10 more stocks, guys, totaling 15 stocks, and each of those could be valued up to $2,000. So get on it, guys. Use that Moomoo link down below. And with that being said, I'll catch you all later.